to Retire Smart Maryland. My name is Cynthia DeFazio, joined today by Ozzie Culhagil and Prashant Sabapathi of Elite Income Advisors. To our viewers at home, we know that you're hearing a lot about tariffs in the news. Well, what does that mean exactly, and what impact will it have actually on inflation and the importance of equity exposure? We're going to talk about that in today's episode. Prashant, how are you today?
I'm doing well, thanks. How are you?
Fantastic. Thank you so much. And Ozzie, how are you?
I'm doing great. Thank you for asking.
Good. It's good to see you both again. I know how busy you are and that you always make the time to come into the studio. So I know the viewers at home truly appreciate that. But wow, so much in the news right now about tariffs and the overall impact on inflation. Let's talk a little bit about that. Why should we be concerned?
I think the idea of tariffs are that they are, by design, I think, inflationary in nature, right? I think it's to try to incentivize companies to produce more goods and services in America as opposed to production overseas. Now, the result of that is that if companies maybe do not comply with that idea, inflation is going to be present in our economy. Prices may start to creep up in the shorter term. And I think the fear for retirees is what happens if that is not a short-term thing, but more of a long-term thing, right? If costs continue to go up, and I only have a fixed income when I get to retirement, how am I going to be able to deal with that at the end of the day? And look, I think to make things as simple as possible, the answer to higher costs is more income. The more income we have, the better we're going to be able to handle the increasing cost of living. So we have to start thinking about not just how do we build in enough income to live the way that we want to today, but how do we build in even more income than we actually need so that when cost of living goes up, that we're very well prepared.
Yes. And what about an equity exposure to provide the inflation hedge? What is that exactly?
Yeah, so equity exposure just means investing in the stock market to be able to try to outpace the inflation rate with the growth of our assets. But here's the issue. You go back to a year like 2022, when inflation was really high. If we had all of our money in stocks at that point in time, what we would have experienced is a tremendous decline in the investment value of our portfolio because stocks went down and inflation was higher. So what's really important about allocating to equities or stocks is that you must have, in my opinion, a long-term vision when you're investing your money. In any given year, markets are going to do crazy things potentially, and you don't want to be depending on that equity portfolio, that stock portfolio, in a year that it is down. So instead of looking at stocks, we actually look at more fixed instruments, things like annuities. Those have become really popular with our clients in this day and age because annuities provide guaranteed income. Oz, you want to talk a little bit about what annuities can do for the right situation in retirement? Why are they so valuable for some particular people when we get to retirement?
And the important part is for the some people, right? You know, the annuities are not good for everyone. And there is all kinds of different annuities out there.
Okay.
We usually, you know, focus on the fixed index annuities for the reason is if the market goes down, that you cannot lose money on that annuities because of the market decline.
Okay.
But when the market goes up, you can capture some of the gains, but it's not going to be all the gains because that will be too good to be true. But the important part of using this kind of annuities to create us the guaranteed income stream that we cannot live off. And so what we usually do is like we looked at the people's portfolios, and if they have, let's say, $1.5 million, and we find out how much income they need. And when we are looking into that, we think about the cost of the inflation and the rising prices on everything, and we try to be as much as possible income coming in, and we create the portfolio based on that so we can have X amount of income guaranteed to come each and every month.
Perfect. So important.
I think when it comes, I'd like to just add one more thing. When it comes to annuities, what is the trade-off? I think a lot of times people hear annuity and they kind of get scared of it because they're out in the news. And so I think what's really important is understanding the benefits and the drawbacks of annuities. That way, when you have both sides, it's actually pretty easy to determine whether or not it's actually a good fit for you. So the benefits, we've talked about it, right? Guaranteed income, safety and security, if you're using something like a fixed indexed annuity, those two things are really good things. What are the drawbacks of using an annuity? So in my opinion, there's maybe 2 or 3 different drawbacks. Now, if you plan the way that we plan for most, if not all of our clients, these drawbacks tend not to be actually that big of a deal, but we should know what they are anyway. So number one, annuities are long-term commitments, okay? So most of the annuities that we utilize in our office are 7 or maybe even 10-year commitments. Okay. It doesn't mean that you can't touch your money for 7 or 10 years. What it means is that there's an amount that you're allowed to take out without incurring a penalty. But if you take out more than that amount, then the annuity company, they're gonna whack you over the head and they're going to start to charge you a little bit of a penalty to exit. Okay, so that's number one, annuities a long-term commitment. Number 2 is some annuities have fees associated with them. Before you engage with any type of investment or insurance or annuity vehicle, you should be understanding the fees that are within that particular account. We'll help you do a little bit of an x-ray to figure out what the fees are going to be. That's number 2. And then number 3, Oz said it, annuities inherently, at least the fixed index ones, they're not high growth vehicles, okay? If you're out there saying, I want to try to beat the market each and every year, something like a fixed indexed annuity is probably not going to be the best fit for you. But if you're heading for retirement, you want a little bit more safety of your principal, you want a paycheck that you can count on every month, every year for the rest of your lifetime, it could be a great fit. If your advisor hasn't talked to you about how you should position your money to give you exactly what you need when you get to retirement, it's a great exercise to come into the office and have our team of licensed specialists take you through exactly how this could be one particular solution that could be a good fit for you.
Prashant, thank you. Ozzie, let me ask you a question about inflation risk on your financial plan. Talk a little bit about how cost of living adjustments can affect Social Security as well.
When we look at the Social Security, I don't know the exact numbers, but if we go look back maybe the last 50 to 60 years, the average increase on the Social Security, I believe it's about 2.3%, somewhere around that. But when we look at what the prices has been in the last 5 years since COVID, I think like we are well over that Social Security cost of living adjustment. So what we need to find out is, at the beginning, Prashant talked about like we need more income. So we have to plan accordingly to think about all those things, like the prices are going to increase on the groceries and the gas and all the other stuff. So we have to plan for more income.
I think what's really interesting, I think back to, again, 2022, and I keep bringing this up because 2022 was the year where everybody felt the impact of everything going on, not just in the economy, but in the stock market as well.
Absolutely.
I remember so many people, and I'm sure our audience can probably relate to what I'm about to say, so many people came into the office and Social Security gave us this great big cost of living adjustment. And you know what I heard? I heard, Prashant, I got a cost of living adjustment from Social Security, but why does it feel like the cost of living adjustment that I received didn't actually keep up with the cost of living?
Wow.
And I think a lot of that has to do with how the consumer price index is actually calculated, what goods and services are taken into that account.
Sure.
And I think a lot of times inflation, if you look at 2022, inflation topped out at 9.1%, but the cost of living adjustment we received was only about 8.7%. And so when you look at those factors together, I think it's reasonable to expect that Social Security alone might not fully keep up with the true cost of living. And so folks, if you don't have an inflation plan in place, if you don't have a plan to have not just a static, but a rising income through your retirement, now is the time to put that plan in place. You don't want to wait, because if you wait too long, it could be too late. The phone number is 833-308-5200. That's 833-308-5200. You call this phone number, have your calendar out, schedule this free appointment with our team of specialists. When you come in to visit with us, we're going to put together an income for life plan. It's going to help you map out your income every month, every year for the rest of your lifetime, and we will take into account the threat of rising costs and rising taxes as well, and how that's going to impact your retirement. So it starts with that phone call. You have to take action. You should do it right now. It's 833-308-5200, or you can scan the QR code at the bottom of your screen.
Prashant, thank you so much. Ozzie, thank you so much. To the viewers at home, the number to call is 833-308-5200. That's 833-308-5200. You've worked your entire life to get to the retirement years, and you deserve to have peace of mind. Don't miss the opportunity to call in today, 833-308-5200, or grab your smartphone, click on the QR code at the bottom corner of your screen. That'll take you right to the landing page of Elite Income Advisors, and you can put your information in and claim your spot accordingly. We're going to take a very short commercial break, but when we come back, we're going to talk more in depth about how to plan for longevity and the fact that you don't want to outlive your money. How can you put some hedges up? Stay tuned.
Having a true written financial plan provides peace of mind in a way that nothing else really can.
In our job, we want to make sure that we give it to our clients the guaranteed income stream for the rest of their lives, so they don't have to worry about what's going to happen.
As a specialist in distribution, we're helping people make sure that their money is going to last for the rest of their lifetime so that they never run out of income, and minimize that tax consequence along the way, and then help transfer that to their heirs in the most tax efficient way.
I think the most important to me in the financial planning is first of all, you need to understand what the client wants. It's all about the client.
So much of what we do at Elite Income Advisors surrounds helping people understand exactly where their paycheck is going to come from, how much it's going to be, and making sure that, most importantly, that it increases through their retirement.
Welcome back to Retire Smart Maryland. My name is Cynthia DeFazio, joined today by Prashant, Sabapathi, and Ozzie Culhagil of Elite Income Advisors. And we're talking all about retirement planning, talking about tariffs, talking about inflation, and in this segment, longevity. How do you ensure that you're going to last? Your money will last. Prashant, let's talk about that. Talking about longevity, obviously, how long we're going to be living. We're living longer. And also the fact that people don't want to run out of money. What are some things that people can do to make sure that that doesn't happen?
I think number one is you have to understand your spending. Okay, you have to understand what is going to be outgoing on a monthly basis. If you don't have a spending plan in place, and what I'm talking about with a spending plan is a written out idea of what all your expenses are going to be. And so I'm not just talking about, hey, it's all in my head and I kind of know what I spend.
Right.
I'm talking about actually sitting down and typing it up or writing it out. That is going to be what we call your monthly income target, right? So if you don't know what your spending is, that is a great place to start. I think the more we can do a deeper dive into our spending, the quicker we're going to be able to find some of the waste and some of the excess. And look, we're all guilty of it, okay? Me, just as much as anybody else, we all spend money on things that we know that maybe we shouldn't. That's going to happen, and that's okay, but we should know what that looks like, and we should be cognizant of it. So number one is create a true spending plan.
Okay.
And then number two, I think for the married folks that are out there, I think we have to look at what happens to our income. Heaven forbid one spouse passes away.
Yes.
You know, I feel like just over the course of the last 12 months, I feel like I've had so many calls from our clients saying, hey, my spouse passed away. I think it must have been at least 10 to probably 15 different calls saying that a spouse passed away.
Yes.
Well, when your spouse passes away, there is a tangible impact on your income. So like if you have a pension.
Some people don't know that, what happens with the Social Security.
So why don't you talk about that for a second? So let's say I have a married couple, Oz, and one spouse passes away, what happens to the Social Security? Because you brought that up. What happens to Social Security when one spouse passes away? Let's start there.
Yes.
So let's say the husband and wife, they are both collecting Social Security. Let's say the wife is collecting $2,500 a month and the husband is collecting $3,000 a month. If the husband passes away, actually the wife is going to lose her Social Security because it's the lower one. And the husband, and then she's starting to collecting the husband's because it's the higher of the two. Most of the time when we meet with the people think that they can still collect both of the Social Securities because if you're thinking about it, actually, yes, you earned it.
Yeah.
Right.
You earned it. That's why they should be collecting, but that's not how the Social Security
Our clients
works.
they're really smart and they're really logical, which is why you would think you put all this money in, you should be able to get it all back out.
Right.
But you're exactly right. I mean, when one spouse passes away, we're going to lose the lower of the two benefits.
Okay.
And so what we're going to experience is we're going to experience an inherent loss of income. In this example, if you lost $2,500 a month, is that a significant amount of income to lose? I think that it is.
Of course, absolutely.
Okay, so how are we going to make up that income? We're going to make it up by withdrawing from our portfolio. But the more we withdraw, the higher the probability is that we might actually run out of money one day. And so I think that's one thing to look at if you're married is what happens when one spouse passes away. On the other side of that is what about the taxes?
Yes.
Right? So one spouse passes away.
We are in a different tax bracket.
We go from married filing jointly to filing as an individual.
Yeah.
And so that's what I
tough.
would call the embedded, I call it the quote unquote, the death tax, right?
Absolutely.
And so this is something that I think people don't think about because number one, nobody likes to think about death, right? But it is reality that we have to be able to plan for these types of things. So let's sit down and let's talk about it. It's a difficult conversation to have, but I'd rather have it right now rather than have it at a later point where something has already happened and now you're scrambling to try to shuffle things around.
Absolutely.
And the one other point that we should be looking into that, so that's the Social Security part of it.
Yes.
We also have the, the pension side.
Yeah, that's
right. There is still people, especially for those who's working for the government, they still have pensions. But these pensions have all different kind of survivorship options. And most of the time, if you are working, especially in the government, if one spouse passes away, who is the one collecting the pension, now the other spouse probably is going to get 50% or less of that pension. So if you are getting like $4,000 a month from pension, now it's $2,000.
Wow.
But your expenses are still the same. It's like not much things are changed. So how are we going to find a way to make that income gap?
Yeah, I think it's a good point.
Absolutely.
And I think a lot of people spend so much time planning for what life looks like when we're both living. And it's a tough thing to do, but when one spouse passes away, there's typically going to be a significant drop off in income. And when that happens to you, hopefully many years from now, but when that happens, you should be prepared. Pick up the phone, give us a call. It's 833-308-5200. That Income for Life plan is going to show you how much income you're going to have while both of you are living. But we'll also highlight for you what happens when one spouse passes away. You determine whether or not you have enough income to live the life that you deserve after decades of hard work. It starts with that phone call, but that is on you. You have to pick up the phone. You have to give us a call. Come on in, visit with our team, get that Income for Life plan put together for you. If you have your smartphone, you don't feel like calling in, it's actually even easier. You just open up the camera, scan this QR code. It's going to take you to a page that will allow you to schedule that visit with us online. And if you do want to call, 833-308-5200.
Prashant, thank you so much. Ozzie, thank you so much. To the viewers at home, that number to call is 833-308-5200. Or as Prashant mentioned, it's even simpler. Just open up your camera app on your smartphone, click on the QR code. That'll take you right to the landing page of Elite Income Advisors. You'll put a little information about yourself, and you can schedule your time accordingly. Don't you deserve the Retire Smart Roadmap? We think you do. When we come back after this very short commercial break, we're going to talk about the importance of legacy planning. So stay tuned. We'll be right back momentarily.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Retire Smart Maryland. My name is Cynthia DeFazio, joined today by Prashant, Sabapathi, and Ozzie Culhagil of Elite Income Advisors. We started our show today talking about tariffs, talking about inflation, talking about the impact on Social Security if you lose a spouse. But in this segment, we're going to talk about legacy planning because that's important too. You've worked your whole life to amass a legacy. How do you want your wishes to be carried out? I have to ask a very important question. Ozzie, let me start with you. How often do you find that people don't like to talk about legacy planning overall because no one likes to think about the end?
Well, nobody likes to die, so I think that's the first thing, right?
I didn't tee it up that way, I'm sorry.
Nobody likes to die, so that's why most of the people don't like to talk about it. But, you know, it's going to happen one day. We just don't know when it's going to happen. But what we need to take a look at it is, like, when we pass away, what are we going to leave to our, you know, heirs? And most of the time it's our kids, and most of the time it's our grandkids, because if you're around the age of 75 to 80, like most of the people that I know, their kids are doing great, and now we have to think about the grandkids. So what are we going to give it to them, and how are we going to give this money to them? Like, you know, is there a tax efficient way to make that better?
I think it's a great point that you bring up, you know, especially when we've been taught for years that the best place to save our money for retirement was in pre-tax retirement accounts. So you're probably watching this thinking, oh wait, I have a 401k, or I have a thrift savings plan, or an IRA account. The thing is, when you pass away and you leave that money, that pre-tax money, to your beneficiaries, they must withdraw it. As of this recording, and under current law as of this recording, they only have a 10-year period of time to withdraw that money out of that inherited beneficiary account. So if we take an example, because this is a real-life example, one of my dear clients, you know, passed away, and we're going through their beneficiary situation with their heirs. And what we found is he had about $1 million, left it to one son. Son was about 50 years old at the time of inheriting that money.
Okay.
Now, son is doing great. Like Ozzie said, he's earning about $250,000 per year. So his tax bracket is also a little bit higher than the average tax bracket of most people that are working right now. So his concern is, okay, I am earning $250,000, and now I have this $1 million account that I have to withdraw over no more than a 10-year period. Well, every time he takes a withdrawal, guess what he has to do?
Pay taxes.
He's got to pay taxes, and he's in Maryland, so he's got to pay federal, and he's got to pay state, and every time he takes that withdrawal, it actually increases his income. And so what we're finding is his tax bracket is likely to be even higher than it was before. And so, folks, I think this is something that we have to think of. Somebody is going to pay the taxes. It's either going to be you, or it could be your heirs. What if there were a way to improve the tax efficiency of these accounts today?
Yes, absolutely.
Wouldn't we like to know about that now, as opposed to having our children find out, children and grandchildren find out about it years down the road when taxes are potentially higher?
Absolutely.
I think that is a conversation that is worthwhile, and I think that we should be having that conversation right now.
I do too. So talk a little bit about this really great website, testmytaxbill.com. Ozzie, what happens when people visit that website?
So when the people goes to that website, it's very simple, and they don't even need to enter a lot of information. They have to enter, their age, and they have to enter, how much is in their, before tax account.
That's right.
And this is a software. The software calculates based on today's tax rates and everything. It tells that how much that you're gonna ended up in your lifetime, roughly the tax is gonna be. Versus if you were to convert that account to a tax-free account today, what is the tax bill is gonna be today? That's why we call that my tax bill for that reason, that the people can see that how much I'm gonna pay today versus how much my heirs ended up paying it at the end of my life.
And what's really cool about the website, it's a great resource website. Again, testmytaxbill.com.
Yeah.
It's a great resource website because there's sliders on it. You can say, what if my tax rate was, I'm making up a number, 22%? Or what if it was 28%? Or what if it was 35%? So if you think taxes are going to go up in the future, you can actually play around with this calculator to give you a rough idea of what that future tax bill could end up looking like. Now, it's not a substitute for getting advice from a licensed professional, but it does get you thinking about it in maybe a little bit of a different way. So if you're sitting at home, you got the smartphone out, everyone's got internet on these things, just open up your browser, visit testmytaxbill.com, enter the little bit of info you need to play around with the calculator. You can play around with it multiple times too. You can actually put different numbers in there, different tax rates, and you can start to test your retirement tax bill. Very cool resource website. We just developed it for the use of our great audience.
I love that. And so you're able to see that if someone could benefit from a Roth conversion, perhaps.
Yeah, and in a lot of cases, we find that doing something like a Roth conversion makes a lot of sense. And believe it or not, we actually see cases where things like Roth conversions do not make sense for people. It's all dependent on your unique situation. So folks, if you've never explored what your retirement tax bill could look like, or what the embedded tax liability is with those pre-tax retirement savings, you should visit the website testmytaxbill.com. Alternatively, you can call us and schedule that free appointment to visit with our team. The phone number is 833-308-5200. Don't let a lack of planning derail your retirement. It starts today. It starts with your phone call or your QR code scan. Just call 833-308-5200 for that complimentary retirement review.
Prashant, thank you so much. Ozzie, thank you so much. To our viewers at home, most specifically, thank you for spending time with us today. That number is 833-308-5200, or click the QR code. Be safe, be happy, be blessed. We'll see you back 1 week from today. Take care now.